Okay, so we'd like to begin the second panel of the day. The question that we will be focusing on in this panel is primarily the government's response to the recent financial turbulence and the implications of the financial sector. Now, one thing that is very clear in the last few months is that we've had a new leadership, a new political leadership, and that political leadership has been tested almost immediately when it came into office. I think since it's almost been 6 months since election time, it is a good time to take stock of how well the leadership has done and what more can be expected of it. Okay, so starting with you, Mr. Ali Raza. Pakistan's financial sector, not so long ago booming a lot, has come under a lot of stress in recent times. How do you measure the recent leadership's response to this recent development of the stressful environment?
First of all, let me express my sentiments about this seminar. I think it was an excellent idea. I think there's some excellent people here, and I think in times like this we should have more of these seminars, because I think we all need to exchange views and try and find solutions to what certainly our country is going through. I think your question was the response of the regulators towards what's been happening. Well, let me just first of all say that paradoxically, unfortunately, the Pakistan banking sector does not have a solvency problem at all. And this is very different to banking sectors almost everywhere in the world. I mean, you look at what's happening in the US, you look what's happening in the UK. In effect, governments are going to end up owning a number of financial institutions. I mean, something which was completely, was thought of as totally improbable just 2-3 months ago. And the reason why we've been insulated is because we are really a first generation banking system. And over the last 6-7 years, because of the reforms and because of, I would say, hard regulation, the banks have got strong capital adequacy ratios. Lending in Pakistan is collateralized completely, unlike lending in a lot of countries. We don't have any strange, exotic off-balance sheet items. Our off-balance sheet items are simply letters of credit and guarantees, and generally they're not more than 15 to 20% of the asset base. I think over the last 6-7 years, the quality of human resource, the investment in technology, has also helped efficiency in the banking sector. So overall, there is no solvency issue. However, having said that, there is a liquidity issue. And that liquidity issue, I think, is something which all of us know, why we face this liquidity issue. It's essentially because the foreign exchange reserves have been going down, money has been going out of the banking system as a consequence. The deposits, unfortunately, in the last 3 months have gone down by a reasonably large figure, something in the region of 230, 240 billion, which is a good percentage of the total deposits in the system. Thirdly, the issue of circular debt and the fact that the banking system has funded a lot of oil transactions, etc. And that goes back to the fact that the government has a large deficit, and it's wanting to control its borrowings from the state bank. Therefore, the banking sector, to some extent, is being used to fund the payments that have to be made to the oil marketing companies, to the refineries, and so on. So there are a number of reasons why we face this issue, but we are facing this issue. And recently, I think the State Bank took a good step by reducing the SLR and the CRR, which effectively has put back about 200 to 220 billion in the system. But at this point in time, our assessment is that the needs are almost at least twice of what has been released. Now, I know the central bank has its own problems, and maybe Tawfiq can throw some more light on this. But this is really traditionally the peak season for borrowing in Pakistan. Number one, this is the season when the financing of commodities starts and kind of reaches its peak in February. And we're looking at something like 100 to 150 billion for this. Last year this figure was 20%, 30% lower. The reason it's high this year is because the support price has been raised for a number of commodities. So that's one. The second is the cotton borrowing season kind of picks up at this time and then reaches a peak again around February or so. So coincidentally and unfortunately, we are hitting this liquidity constraint at a time when the borrowing needs of the basic sectors are just about to start peaking off. Now, having said that, you can understand the position of the State Bank. There is a demand management process at work. Inflation is still 20% plus. Interest rates are still negative in real terms, even though deposit rates have gone up, but vis-a-vis the rate of inflation, they're still in negative. So one can appreciate the demand management pressures that the central bank has to manage. It's not an easy situation, but let me tell you, we have the luxury of facing a situation which is resolvable, as opposed to most countries. I mean, the US, for example. I mean, today you have the automakers, wanting $30–40 billion. Tomorrow it will be the steel producers, wanting $100 billion. Today cities are approaching the federal government. There are 4 cities that have approached the federal government for assistance because they can't, meet their expenses.
So, Mr. Tawfiq, do you agree with this assessment? Do you?
Sorry, let me just finish. Our problems, when we'll talk about them, our problems are there, they're certainly there, but they are of a much lower order of magnitude. Let me just finish by giving a final example of why I'm saying this. A country like Iceland, with 300,000 people, went to the IMF for $10 billion. We're a country of 170 million people. We're going to the IMF for something like $7 billion. So that's the order of magnitude, and I think it's very important that we put this problem in context. Our problems are certainly there, but they are resolvable, and thank God that we are not a second generation economy as yet. Our issues are basic, they can be fixed. I think the government has the right policy, the right approach, and today I don't think governments have options. They've got to deliver, they've got to have a plan, and I think there is a plan, and I think that they will deliver.
Tawfiq, do you agree with that assessment?
Yes, largely. I think the response, whether it's of the government or from the financial sector regulators, has been, it has been